Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. Well, it's Friday the 13th, and not such an unlucky day for the market, given the fact that although key indices have taken a pause after a record run yesterday, but the mid-cap index continues its unabated rally. So the mid-cap index clocked that crossed that 60,000 mark for the first time ever. In fact, it also posted a record close. The markets, of course, ended flat for the day with a negative bias. I'm talking about the frontline indices. The Nifty, however, held on to that 25,350 mark. So for the day, very flat with a negative bias, but for the week, both the benchmark indices have gained in excess of 2%. So a good week where we saw a short covering rally yesterday that took the Nifty past that 25,400 mark for the first time ever. But today, of course, was a day of breather. However, broader end of the markets continues to see fireworks. Both the Nifty mid and small cap indices, of course, were witnessing buying interest today. Sectorally, if you look at the IT pack, metals, PSU banks, realty, these were some of the pockets that were shining today. But FMCG was one pocket that continued to be a drag. If you look at the India VIX, that cooled off quite a bit, 4%, and the breadth was quite positive. So the NSE advance decline ratio was at 2:1. And if you look at the individual movers, Wipro was the big one today that gained somewhere around 4%. Bajaj Twins, good traction there ahead of Bajaj Housing listing. IndusInd Bank, Axis Bank were some of the other private banking names that saw good traction because the Nifty Bank Index also managed to recover from opening lows. In fact, ended the day in the green, higher by about 0.3% or thereabouts. Individual losers on the index, SBI Life, Adani Ports on the back of news flow. You had HDFC Life as well not doing all that well. ITC, Coal India, NTPC, ONGC were some of the other laggards. But for the week, if you see, most of the sectors have ended in the green. In fact, all of the sectors barring the Nifty PSC basket, ended the week on a positive note. In terms of the mid-cap movers, Jubilant Pharmova continues its up move. Godfrey Phillips, another one that clocked gains of somewhere around 10% or thereabouts. Of course, ahead of the board meet next week when it will consider a bonus issue in the ratio of 2:1. IDBI Bank, Home First, Linde India, these were some of the other movers. On the flip side, Narayana Health was one stock that was the top laggard on the Nifty 500 index. HSBC has initiated coverage on the stock with a reduced rating. The stock clearly reacting to that. Aegis Logistics, BLS International, Zomato, Patanjali Foods, where we saw a block deal under pressure. But let's talk about the texture of the market and how the next week is really looking like for the Nifty and Sensex. And next week, mind you, would be a big week. We have the Fed meeting coming up, and that could signal a turn in the rate cycle as well. So let's welcome Jay Thakkar, who's the head Derivatives and Quant Research at ICICI Securities, to talk about the market and some of the stocks that were buzzing today. Jay, great to have you on the show. Of course, today was a day of breather, but yesterday we saw the Nifty, saw Nifty seeing a short covering rally, which took the index to 25,400. Today was a breather for the benchmarks, but do you think next week we are poised to continue with the up move and 25,500 is almost here?
Very good afternoon to you, Nandita. And as you rightly pointed that yes, we did see a good short covering move coming on the weekly expiry day of the Nifty. I mean, once that level of 25,100, 200, wherein there was maximum Y, Nandita. So I would say that on the weekly expiry, if you say in the first half, at least until 132, there was almost 4-5 crores of open interest on the call side. And once those levels were taken off, I mean, we saw the shifting of the strikes happening from 25, 100, 200, 300 to 400. And then it just kept on moving. The short covering kept moving, and that really caused a breakout above its previous high. And once that previous high was taken off of 25,333 or thereafter, it gained further momentum and helped Nifty to even go up and surpass 25,400. Interestingly, one thing I would say that, in this recovery, Nandita, what has happened is the Bank Nifty was relatively performing quite well. I mean, that was showing that strength. The banking names, or I would say entire BFSI, so, insurance was already doing good earlier in anticipation of the GST, council meet and all. So it was already performing. What was left was the NBFCs, which were performing quite well in anticipation of the rate cut, I believe. And there was the strength and the long positions you already seen out there. what was left was banking, and we saw that private sector banks really bounce back quite sharply as compared to the any other sector of Nifty. In fact, Bank Nifty bounced back quite sharply than that of Bank Nifty as well, and that was ahead of the Bank Nifty expiry date. And then Bank Nifty expiry went sideways, and we saw a breakout again coming on the Nifty expiry date. So prior to Bank Nifty weekly expiry, we saw that sharp move coming on Bank Nifty, which clearly indicated that the probability of an upside breakout is quite high. And then we have been seeing that the private sector banks are now finally most of them are breaking out from this sideways consolidation. And so far we have seen that banking was the sector which did not perform or outperform the Nifty year to date. Otherwise, most of the sectors have outperformed Nifty, right? So I think that now is the chance of Bank Nifty, and if Bank Nifty performs from here on, with the help of the private sector banks and some short covering happening in the PSU segments, PSU banking names, then I think it will have Nifty to inch further, upward towards maybe 25,800, 26,000 levels as well. The short-term hurdle is definitely there at 25,500. Technically, or maybe from the derivatives point of view, wherein you have seen the maximum Y on the call side. But otherwise, I think the comfort is more there on the long side now, as a risk flow is quite favorable. I mean, the reversal are at 25,000, 25,200 range, on Bank Nifty is at 51,000, 51,500 range, but the upside is quite high. So I think risk flow is positive, the outlook is positive going forward for the weekly expiry, next weekly expiry, as well as for the monthly expiry. One interesting fact which I also like to share is that we did not see any major spike or a reversal in the IVs or maybe India VIX, Nandita, despite that fall which we had seen coming in last week. So not major reversal in India VIX or IVs. So that was a comfort. Secondly, the other comfort was that since the bottom, recent bottom of 24,758, since that day, the very first day of recovery, since then, the FIs have turned buyers in the cash. So you see that continues, and yesterday, massive buying by FI. Overall, all put together, it was 25,000 crore plus, I would say, derivatives and cash. So that's also something positive.
All right. So downside looks limited from here. That's what you're saying, right?
Absolutely. So I think that, 25,000 to 25,200 from current levels. So it's hardly a percent or two from here on. Potentially up till 26,000. Right. So, there is risk available. Likewise, on Bank Nifty, I would say 51,000 to 51,500 is the supported upside. On a Bank Nifty, Nandita, can be as huge as 53,500 or so.
All right, I want to get in your thoughts on a couple of counters. HDFC Bank, you've said that most of these private sector banks have started breaking out on the upside, but HDFC Bank, I think the charts looking very flat today. 1660 is where it's at, but it has been in this range, right? 1600 to 1650, 1660 range. Is there any possibility of a breakout on the charts of HDFC Bank and perhaps levels of 1700? Do you think those levels can be retested?
So you're right. As you rightly said that HDFC Bank has been moving quite sideways, Nandita. But interestingly, one thing I'll say that what has happened in HDFC Bank is we had seen a huge short coming in since January, and then we saw that entire short got covered. We saw some long build up as well, and the stock actually had reclaimed the levels of 1700 plus. It's almost near to its all-time highs, right? But since then, what we saw is some short covering and shorting, right from 17,750 until recent lows of 1575. So that 200 points fall saw some shorts build up. Recently, the Bank Nifty fell, Nifty corrected, HDFC Bank outperformed, it did not fall. It just kept on consolidating, wherein the momentum technically, if you see, was continuously in the buying mode. So it was showing that divergence. So relatively, it was showing that divergence as to Bank Nifty, wherein Bank Nifty was good. Sell more, HDFC Bank was in the buy mode. That's technically. From the derivatives point of view, we did not see short build up further. In fact, rather likely to break out on the upside and inch towards the levels of 1700, 1720 in the near term. So 1700 to 1720 is what we are looking at least in September series, and that would have Bank Nifty to move higher as well.
Okay, Bajaj Twins, a lot of traction here. Bajaj Finserv, that stock is near 3-year highs. MK has rated the stock a buy, and Bajaj Finance has also been seeing good traction over the last 1 month or so. Of course, we have the Bajaj housing listing coming up, so these stocks have seen a lot of buying interest ahead of that as well. So, any particular level you'd be watching out for Bajaj Finserv in particular? Is there a chance of a fresh breakout, or do you think the move that it has seen over the last month or so could signal some bit of fatigue on the charts?
Well, see, traditionally, Nandita, if I see, then the breakout has already come, and it's a huge breakout. I mean, technically, if you see then on a monthly or quarterly chart, if you see, or even for that matter, yearly chart, if you see, then Bajaj Finserv's all-time high was still 1932. I mean, so till now it's 1906. So 1932 was actually formed in October 2021. Since then, it went into a sideways territory. So, it's 21, 22, 23, 24 now when the market cap is higher. Bajaj Finserv was consolidating in a symmetrical triangular pattern technically, and that triangular pattern has provided or has broken out on the upside. That got confirmed above the levels of 1740. So I think that now closing below 1740, 1700 is unlikely, or the probability of the same is less because of monthly indicators are available to the buy board. Now the range, if I say, for this entire consolidation was of 900 points. So from the lower side, if you say is 90%, from upside also, if you see, it has corrected from say 1900 to 1000, it's nearly around 50%. So from the breakout level, if you see, now if you just superimpose that much conservatively as well, so targets will be nearing 2500. If you're looking at positionally, 2500 is the target. From the derivatives point of view, we still continue to see the long beta counters. We don't see any weakness out here. But if there is any weakness in this, I think that if at all there is some profit booking, so that would be termed as a long unwinding unless 1740, 1700 levels are present. So if at all there is a dip, we should definitely be buying in, because if you see risk reward, I'm looking at 2500 on the upside, whereas downside is limited until 1700 max.
Okay, that's the view on Bajaj Twins. But what about Bharti Hexacom? Do you have a view here? Because the stock was, in demand today, almost a 9% up move, but cooled off a bit from the day's high. Nevertheless, the stock has been upgraded by Jefferies. Target price has been raised to 1600 rupees. Of course, Jefferies believes that this could be the best play, on tariff hikes. Looking at the charts, has seen a good 60 to 65% up move over a longish or medium term time horizon. Last 1 month also has seen a good 20% kind of an up move. 1600 levels, would you say that it could be possible in the next 3 to 4 months?
First of all, Nandita, as a disclaimer, I would say that since I track derivatives and quant more, so I am more comfortable on there in the FNO segment. But then, however, technically, one can track, if one is looking at the other FNO stocks, then definitely technically there can be a research on the or study on the non-FNO stocks as well. I do track them. I do not recommend. But then, just commenting on this, I would say that the chart history is quite less, relatively. I mean, only since April only. So there's not much on the chart, frankly. But then, looking at whatever chart available it is, there was some consolidation above which it did quite a breakout about 1200, 1250 levels. So I can just say that 1200 to 1250 is a good support range. But then arriving at the target technically with such a relatively smaller time or data would be difficult.
Okay, point taken. But Granules India, let's talk about this stock, because this stock was in the FNO ban today, right? And yesterday it saw a deep cut on the back of news flow. But Motilal Oswal still has a buy rating on the stock. They have a target price of somewhere around 680 rupees or thereabouts. But how are you viewing the chart patterns of this particular stock?
Yes, I mean, Granules, you're right, has seen a significant short build-up. I mean, it's still more than 200% of the market-wide overall limit. And so if you see since 5th of September, we have continuously seeing short build-up here. And since then, if you see, I mean, the recent high was nearly around 718, wherein that was on 5th September. We saw short build-up happening here. And did not see any significant recovery, and then it had finally broken down from a crucial support of 660. So I think that there has been a clear reversal on Granules. There is a huge short build up as well, but then it has turned I would say oversold as well in the short term. So short term it's oversold. I think that stock may find some support around the levels of 530, 535 levels. Once there is a bounce back, that bounce back should be utilized as an exit opportunity. But 530, 35 levels should be held as of now is what I believe. Because the stock uh, has gone a bit oversold and might turn even oversold around the levels of 535. So if those levels are broken, it could be a further decline thereafter. But then as of now, from the data, I believe that should be the good immediate support.
Okay, the other stock that's on my radar is Samvardhana Motherson. This stock has been in focus, right? Of course, especially since global clients like BMW have slashed their guidance, and the stock has been downgraded by Investec as well. Target price is at 195 or thereabouts. Today the stock was under pressure but staged a good recovery from the day's low. What would you attribute this recovery to? Do you think the stock will see buy on dips?
I think yes. See, first of all, I'll comment technically on some of the others. And I mean, see, this stock provided a very, very long, huge breakout. I mean, it had a multiple yearly resistances at around the levels of 140. Once it was formed in 2017, second it was formed in 21. So after 2017 is what Nandita saw was 140 plus levels. So that was, I mean, that got breakout in May 24. So it was almost like after 7 years. It has come out of the 7 years consolidating range. So that's for the long term is positive technically. Secondly, I would say that from the immediate basis since July or so, or maybe since August series, since last series, we have seen a good long build up in the stock. There was a good long. Thereafter, there was some unwinding of the long. There was some profit booking. But now, since a couple of days, since this recovery has started, we again started seeing some long build up. So I think that on an immediate basis, 180 is a good support. Till those levels are held, there is a high probability it bounces back to 200 to 205. Further momentum will be confirmed about 205 only. Otherwise, this series might end between this range of 180 to 105.
Right. Before I come to your stock recommendations for next week, I want to get in your thoughts on the jewelry pack as well. Gold has hit fresh record highs, and stocks like Kalyan, Senco, TBZ, Moti Sons, all of these stocks have been buzzing, and of course, fundamentally positive brokerage notes have also been working in favor of some of these jewelry stocks. Right, growth outlook remains strong, and outlook for second half of FY25 as well is good, given the fact that we have the festive season, wedding season as well. So that would of course act as a booster as well, but among the likes of, or between the likes of Kalyan and TBZ, anything that is catching your eye?
Well, see, Kalyan Jewelers has been in an uptrend, clear uptrend, and I would say that the stock has not even significantly corrected. So it's so correlated. I mean, it's rather outperforming the move in gold as well. I mean, as far as TBZ is concerned, and that stock also, I mean, the kind of move which we've been seeing since levels of 100, the stock has tripled from those levels. So I would say that technically these stocks have gone up quite sharply, and the risk reward may not be favorable now to enter. Technically, I would say. But as far as the FMO segment stock is concerned, Titan is one stock which I believe directly indirectly is also beneficiary of the upward momentum in the gold. So I think that out there is a good sideways channel breakout. I mean, the probability of the stock taking off 3875, 4000 going forward is quite high. Since last month, we have seen a good short covering move coming in Titan, and because of this short covering move, the stock has managed to bounce back from 3200 to 3800 almost. Right. So major of the short seems to have got covered, and now if it all further moves from here on, we'll see some good buying interest, which will eventually have the stock perform new like that. Right. So most of the shorts are out of the system, and the indicators have turned positive technically. That clearly indicates the upside potential is quite high. So Titan from the FNO segment rather provides a better risk reward as that compared to what could be there of again jewelers, maybe any other equity cash segment stock as far as it related to the whole segment. But jewelry segment.
All right, that's about the jewelry pack. But before I let you go, Jay, what would be your top trading picks for next week?
Sure. So, Nandita, as I said, I'm bullish, at least in the short to medium term, on private sector banks and the kind of breakout which we have seen coming out there. So, IndusInd Bank would be my first buy recommendation. I mean, technically, we have seen a good breakout coming out from an inverse head and shoulders pattern with a positive bullish crossover on its momentum indicators on the daily weekly charts as well. I mean, it was quite oversold. So, I believe that IndusInd Bank at these levels can be bought close around the levels of say 1466 on futures. So one can place a stop loss below 1420 and target 1520 to 1540 going forward. Uh, so IndusInd Bank is my first buy recommendation. I think it can definitely provide a good up move. Second buy recommendation is again from the banking pack. I believe that Kotak Mahindra Bank can also perform quite well. I mean, the indicators are quite positive. It has been, showing that positive divergence. So in the futures, it closed at around 1824, and I think that one can buy this placing a stop loss below 1780. So one can target around the levels of say 1875 to 1900 going forward. So IndusInd Bank and Kotak Bank are looking quite positive. I think that will help bank Nifty to move higher. So these are the two buy recommendations from the banking pack. And another stock which I think may do quite well going forward in the following week is Tata Steel. So Tata Steel futures closed at around the levels of 153. We saw some profit booking in the high levels in today's session. However, I believe that one can buy this with the stop loss of 148 and one can target 158 to 164. These are the two short-term targets. I mean, we will see some bounce back coming in this stock as well. I mean, metals are likely to bounce back. So Tata Steel might shoot the levels of 158 to 164 by Tata Steel as well.
All right. So IndusInd Bank, Kotak Bank, and Tata Steel, of course, metals will be in focus. All eyes will be on, whether China will announce a new stimulus or not. Of course, we are watching out for key data points from there. So metals as a pocket will also be in focus. Of course, we have the Fed meeting as well next week. So lots to watch out for on the global front. With that, Jay, thanks a lot for taking out time and joining in this afternoon and sharing your thoughts with us. I wish you a very happy weekend, and I hope to see you again sometime next week.
Sure, wish you the same, and likewise, definitely. It is always a pleasure, Nandita, to be on my show. So, looking forward.
Thanks a lot. Thank you. Well then, with that we've come to the end of this edition of Closing Bell. We are leaving the week on a good note, a 2% kind of an up move for the week for the benchmark indices. And of course, we had record highs as well on the screens yesterday. 25,400 has been conquered. But with that, completely timed out here on Closing Bell from me and the entire team. Thanks a lot for tuning in. Have a great weekend and come back refreshed on Monday morning on Opening Bell with me. Have a good weekend and rest it out well.